Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratas Advisors. Brent and WTI both fell last week as tensions in the Middle East subsided. Brent fell 73 cents a barrel to average 66.59, as WTI fell 91 cents a barrel to average 60.84. For the week ahead, we expect prices to be generally range-bound, supported by the upcoming signing of the U.S.-China Phase 1 trade deal. However, since much of the upside from the trade agreement is already factored into prices, the signing will provide little additional lift. Thus, we expect Brent to average closer to $65 a barrel in the week ahead. The U.S. and China are expected to sign a preliminary trade agreement on Wednesday, but details on what exactly is in the deal remain scarce. There could be some volatility if the details of the deal are released and do not match with recent statements from the White House and leaders in Beijing. Although the details are vague and markets generally assume that China will not be able to fully comply with what has so far been released, there's upside to having a deal in place at all. A deal in place ostensibly adds a level of predictability to trade policy that has been absent. It should also outline next steps in terms of what tariffs would come into effect if the terms of the deal are not met. Overall, while an immediate impact on actual economic metrics is unlikely, it will be a positive for sentiment and could encourage investment over the course of 2020. Geopolitics will be a negative factor for the week ahead. Tensions have eased significantly in the Middle East, and prices have eased as a result. The global economy will be a positive factor in the week ahead. The preliminary trade agreement between the U.S. and China is scheduled to be signed this week, although details do remain scarce. Supply will be a neutral factor in the week ahead. While it appears that OPEC Plus is achieving promised production cuts, the path beyond March remains murky. Markets likely will expect a continuation of the supply agreement in some form and will begin looking for signaling from OPEC leaders to that effect. Oil demand will be a neutral factor in the week ahead. In the absence of major headlines, attention will shift back to inventory levels and supplies. The first quarter tends to see crude and product stocks build, but any outsized movements in the U.S., Europe, or Asia will still be viewed negatively.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us. For more hard energy videos, follow our social media channels.